feels safe right now, doesn't it? The charts are flat. The volatility has vanished. You've survived the holiday inflation, the Christmas spending's done, and you think the storm has passed. But that feeling of safety? That is the most dangerous signal in finance. While you were distracted by the holidays, eating leftovers and watching football, a structural fracture just opened up under the US economy that is going to make 2025 look like a warm-up. We are not just looking at a recession in 2026. We are looking at a mathematical impossibility for the US dollar. Japan is being forced to pull the trigger on the one weapon the Federal Reserve fears most. Trump's tariffs are backfiring in a way that the algorithms didn't calculate, and the global bond market just gave us a grade of D+ on American solvency. If you think your portfolio is safe because the Dow is hovering at highs, you're standing on train tracks staring at a light and believing it's the sunrise. It isn't. It's the train. All right, guys, no song and dance today. Christmas is over and the chaos is back. We need to talk about the dollar. We need to talk about the year one report card of this new economic era and why the ghost signal flashing from Tokyo is about to crash the party in Washington. Now, let's address the elephant in the room. Why is the dollar collapsing if the US economy is supposedly protecting itself with tariffs? During his Christmas speech, Trump defended his tariffs as if they were the best thing since sliced bread. He claimed, because of the tariffs, we've taken in more than $18 trillion. There's never been anything like it. Let's be real for a second. The US government did not bring in $18 trillion in tariff revenue. That is mathematically impossible. That is larger than the GDP of China. But while the number is hyperbole, the effect is real, and it is deadly. The tariffs are hammering down on the trade deficit, yes, but they are doing it by killing global trade volume. US imports of Chinese goods have collapsed from nearly 25% to just 8.4%. On paper, the politicians call this decoupling. In reality, I call it the Triffin dilemma on steroids. Here is the mechanics of the doom loop. When the US stops buying from the world, fewer dollars flow out into the global system. Great, you say. Keep the money home. Wrong. The global financial system runs on dollars. If China, Brazil, and Europe don't get dollars from selling us goods, they don't have dollars to buy our debt, treasuries. Remember that D+ bond auction I just told you about? This is why. We stopped exporting dollars to China, so China stopped buying our bonds. And without China buying our bonds, yields spike, borrowing costs soar, and the US deficit explodes even faster. And what is Beijing doing? Are they panicking? No, they are simply de-dollarizing the trade. If they can't get dollars, they will use the yuan, RMB. The RMB has climbed past 7 per dollar. The yuan is actually rising 4% against the dollar this year. Trump's tariff war is inadvertently strengthening his rival's currency. It is the ultimate irony. By trying to crush China, we force the world to buy Chinese currency to pay for Chinese goods, because they don't have any dollars left. Meanwhile, the bag holder is you, the US consumer. Look at this invoice from a viewer in LA, a $59 item from New Zealand. The tariff was $27. That is a 45% tax. This is a wealth transfer from Main Street to the federal government. In 2026, this tariff war hammers everyone. It weakens the dollar's global standing while raising prices at home. That is called stagflation. So, if the bond market is uninvestable and the dollar is melting, where's the money going? We know gold and silver are rising, but we had no idea how insane the rally was getting until now. Silver is now well above $73. If you bought at the start of 2025, you are up 150%. Now, I have to preface this. Yes, markets that go parabolic usually correct. A pullback is healthy, but we need to understand the driver. This isn't just inflation. This is strategic panic. The biggest shock is coming from China. In the West, we trade paper silver, futures contracts. In the East, they are demanding the metal. The UBS Silver Fund in China is massively oversubscribed. People are paying a 60% premium over the spot price just to get exposure to the fund. Think about that. They are paying $1.60 for $1 worth of silver. Why? Because they are terrified they won't be able to get it later. They are front-running a total depletion of the physical stock. Silver is no longer just money. It is a strategic metal. It is needed for AI chips, solar panels, Tomahawk missiles, and satellites. China sees the war drums beating. They know that if a conflict starts, they need physical metal, not paper contracts. It wouldn't surprise me if Beijing is secretly stockpiling billions of ounces. And it's not just silver. I'm going to give you the cheat sheet for 2026. These are the metals that I believe the US and China are about to fight over. 1, rhodium. 2, silver. 3, palladium. 4, platinum. China will dump their dying dollars to buy these metals. The US will print more dollars to buy these metals. The result? The dollar goes down. The metals go up. The motives are different, but the direction is the same. But the final nail in the coffin, the thing that keeps me up at night regarding 2026, comes from Japan. The Bank of Japan, BOJ, just hiked rates a week ago. The market thinks, oh, it's just a small hike, it's priced in. It is not priced in. Japan is trapped. The yen is collapsing even after the hike, which means the BOJ is behind the curve. They have to hike more. They have no choice. Inflation in Japan is destroying the middle class. Here is the nightmare scenario, the unwinding of the yen carry trade. For 20 years, hedge funds have borrowed yen at 0% interest because it was free, and used that money to buy US tech stocks and US bonds. It was the greatest free money machine in history. But now, rates in Japan are rising. The cost of that free money is going up. If the gap between US rates and Japanese rates narrows even a little bit, that trade becomes unprofitable. And when it becomes unprofitable, trillions of dollars have to reverse direction. Money will flee the US and go back to Japan. And to defend the yen, the BOJ will have to sell their assets. What is their biggest asset? US Treasury bonds. Japan is the largest foreign holder of US debt. If they are forced to sell $500 billion in US bonds to save their currency, who is going to buy them? We already know from the D+ auction that nobody else wants them. This sends US interest rates to the moon. It crashes the US housing market. It crashes the stock market. And it forces the Fed to print trillions to buy the bonds that Japan is selling. This is the ghost signal. Japan isn't selling because they want to. They are selling because they have to. They are sacrificing the US bond market to save the yen. So let's summarize the setup for 2026. The bond market is rejecting US debt, the D+ auction. The tariff war is destroying the global demand for dollars, de-dollarization. The physical market is draining dry as China stockpiles strategic metals. Japan is about to pull the rug out from under the treasury market to save the yen. Scott Bessent is going to get pissed off. The Fed is going to panic. And the volatility we saw in 2025 is going to look like a flat line compared to what is coming. The dollar is at risk of a structural break. This isn't doom-mongering, this is math. Let me know what you think in the comments below. Will China, EUS, silver demand break the comics? And will Japan be forced to dump their bonds before the summer? Stay safe. Smash the like button so the algorithm warns more people. And keep stacking because paper promises are burning. I'll see you on the next update.